Hello and welcome to another lunchtime hour with Jose. And at this time, you're on the other side with Jose and myself. One day I'll get it right. One day I'll get it right. Episode 12, I believe. So we are doing what we promised. We are being consistent.
Yeah, Neil, I'm actually surprised we're 12 episodes in. We sometimes get the time off, but we're definitely getting, and I'm enjoying this because obviously it's fun to interact with our viewers, ask questions, and just between us too, right? I mean, I think it's fun kind of having discussions with other investors. I always lack of friends that want to talk about investing in general.
Yeah, same. I have no friends, so this is fun.
So just a quick shout out. I mean, Neil, we start off with already a lot of people just saying good morning or hi in both our channels. So hi to everybody, Joseph, Mark, Carlos, June, Lisa. Here we have Canadian, Sly Dog, Felix, David, Daniel. So appreciate all the support. And yeah, Neil, I mean, pretty interesting week. Software stocks are definitely taking a hit today. I saw outside of maybe, I don't know if you would consider Unity a software, but outside of that, you are seeing kind of a lot of heavy red, I want to say, in the software space and somewhat in the semiconductor market as well today.
Yeah, no, I agree. I think today we're seeing red, I would say, across the board. And then there are some outliers like Unity, like you said, that reported. Alibaba reported as well. That's also one that is up. So it does seem like the market is correcting itself a little bit today. But I mean, if we zoom out, what are we back to prices not seen since what, last week? So I think that's important to note.
Yeah, Neil. So I don't know. We'll want to jump if anybody is curious about Unity. And first, let me just give a quick shout out to Ruiz Rento. Just kind of gave me a super chat here. NVIDIA, thanks for all the info. Appreciate all the support. But yeah, there were some also other interesting news for NVIDIA that I found yesterday, Neil. So I don't know where you want to jump in first.
Yeah, no, we can touch on the NVIDIA stuff. I can pull up the semiconductor stocks. So if people are interested in seeing what's going on live with those tickers, here it is.
Yeah,
and,
so I mean,
we can definitely touch on NVIDIA.
And NVIDIA yesterday, actually, it's more of a Google thing. So Google yesterday announced that they have the GB200 up and running. And they are the first cloud provider to have both the GB200 Neo and the B200 system up and running. And I think this is pretty impressive. One of my very bullish takes for Google is that they're really good at building systems, Neil. They're really good at building infrastructure. I mean, with their TPUs, I've heard from Dylan Patel and others that Google was kind of one of the first players to actually showcase that they can build huge systems with the TPUs and kind of connect them really good. And I think efficiently was the word I was looking for. And the reason I believe this is crucial, right? Because the GB200, there have been reports that this one was a little bit harder to get up and running. And for Google to be able to have both the B200 and the GB200 up first, it kind of validates that thought that Google is really good at building systems. And the reason why that's crucial right now, Neil, is we've heard from Google, we've heard from Amazon, and we've heard from all these other cloud service providers that they can grow faster in the clouding market if they're able to have the infrastructure ready. Right. So if Google is able to build infrastructure faster than all these other players, then in my opinion, they will be able to start to take market share faster. And Google being the third player, I think Amazon is the lead by with almost 30% of the market share. I forget the numbers, but I know Amazon is up there. I believe Microsoft is also in the 20%, and Google is still kind of like in the teen levels. So for them I think this is actually a big opportunity for them to expand that cloud market share. And it makes me very bullish for both. One, it shows NVIDIA that yes, you can have the GP200 system up and running. But more importantly, it shows that Google can grab market share in this space. So I think the market might be sleeping on Google right now, Neil.
I totally agree with you because I did make a Google video. I think it was yesterday or maybe 2 days ago. I can't even know which day we are, but I said exactly that, right? The market is punishing also not just Google, but Microsoft as well, right? Microsoft specifically said they were energy constrained, but yeah, with Google, I mean, it was pretty clear the message that I got that if they had more capacity, they would have grown more. So punishing them for that while still managing to grow quite at a rapid and respectable pace, I mean, to me was a no-brainer. And then we got that news that you just touched on right now with NVIDIA. It also shows that, I mean, they're working on internal chips, internal workloads, and all of that, but they're not sleeping on making sure that they get the best of the best from NVIDIA as well.
Yeah, and June makes a great point. Google has a forward PE ratio of like 20 right now. It's definitely one of the cheapest in the Max 7. And I think obviously Google has great with their advertisement solution. They have all that data from YouTube. I think they're great in the AI play, even though we don't really see it much. I think they just kind of keep a lot of stuff internally. But I think this is the year, and the next few years are going to be the year where they really showcase that market share growth in the clouding market.
I agree. I mean, it's a wonderful business at a wonderful price, which is exactly what you want to see. It's true that Google's PE historically has never been as high as the Apple's, for example, or even Microsoft. But I looked at its 5-year mean, and it's still well below that, which to me, I mean, plus they are buying back a lot of shares, paying a small dividend. I mean, it's one of those close to perfect companies to pick up, especially in this crazy market.
Neil, actually, I didn't know. SmackDown just mentioned that Jensen and Supermicro CEOs have a conference starting in 28 minutes. SmackDown, just let me know. I don't know if you can post the link or just post on Neil's channel. What's the conference that they're going to be discussing? But I haven't. Sometimes I stay away from Supermicro too much that I might miss out conferences like this.
Yeah, I'm checking on their website to see if there is something more, an event or something, but I don't see any event planned on Supermicro's website, so maybe on Nvidia's. But yeah, I mean, Supermicro, we know we talk about this on a weekly basis now. It's all about making sure they file on time.
Yeah. And maybe this is a good question for you. I'll share my thoughts. But Sagi about seven mentioned Google last live show. Can you please discuss Google versus Meta? Why do you think Meta is commanding better multiples? Is that justified in your eyes? Neil, are you a shareholder of Google and Meta or just one?
Oh, yeah, no, I own both, and Meta is a very, very big position in the core portfolio, thanks to that dip we got, well, that crash we got in 2022, where they were focused on the metaverse. Free cash flow was close to disappearing. So I loaded up quite a lot, and it's crazy that Meta for me is like almost a 7x in total, which is insane. But yeah, I own both. I own more Meta than Google, but Meta gets a higher multiple right now, probably because of Zuck, probably because the CEO. I mean, the market now, funny enough, trusts him a bit more than Sundar. There are less issues, less of a threat. Their dominance is less of a threat, right? All of these chat GPTs and all of that are maybe more of a threat to the Google monopoly, search monopoly. We still have the DOJ trying to break up Chrome and whatnot. So that's probably why. But I mean, I haven't been buying more Meta recently. I've been buying more Alphabet.
Yeah. So I mean, it seems like you don't think the multiple. I don't want to say it's justified, but it seems like at least it's unjustified. Unjustified. I don't even want to go there. But it's just unjustified on Google side, where it looks a lot more attractive. And I want to say the same. I would own both, but at these levels, I would prefer buying Google. And if I was to only be able to buy one big tech right now, I think Google would be. And I think we talked about this in the last earnings show and the last live show as well.
Yeah, no, we did. But yeah, I mean, it's not one or the other, in my opinion, because Meta has been going up and up and up for quite a while, but they continue to execute super, super well. So in my opinion, they deserve the higher multiple, but I also think that Google Alphabet don't deserve such a low multiple.
Yeah. And any questions you wanna tackle right now? I don't know if maybe the semiconductor is not getting hurt as much, but I mean, I don't know. 2%, 2 or 3% doesn't seem as crazy to me. But it seems like the software space is definitely taking quite a hit. Are there any software-based companies, Neil, that you're kind of looking into right now, maybe with this dip?
There is this one, but I mean, it's down. It was down a little bit more today. In the last 5 days, it's down 18% or so. But again, you just have to zoom out and see what has happened. It's still up 336%. Still an expensive stock, and it's gone down right now because of probably some defense cuts, spending cuts, which could impact the defense budget. But then again, if you know that software spending is a super, super tiny percent of the overall, what is it, $800, $900 billion budget, I really don't think that that's a reason why the stock gets hit. Maybe it's just a correction of the stock, plus the headlines are making a greater impact. There was also a headline saying that Palantir's Alex Karp is going to sell $1.2 billion in stock. It's just a change in his trading plan that would allow him to sell up to $1.2 billion. It's not to say that he's going to sell right now 1.2, plus management have been selling stocks for quite a long time, and yet the stock Palantir has continued to go up. But Palantir is definitely a name I'm keeping an eye on if I can buy it for way less than it is right now. Other than that, I'm keeping a close eye on Adobe. I know they are expected to report in the next couple of weeks. Adobe is a name which I know with Gen AI and all of that, a lot of people think their business is going to get destroyed. I just think that the opposite is going to happen.
Yeah, I mean, I enjoy Adobe. The two stocks that I bought in January, were Uber and Adobe. And this is one in the software space I'm definitely looking to look at, to add more into, just because I think, like you mentioned, many expect generative AI to be a game breaker for this one. But I think this is one that can improve its core products and still be able to charge a nice subscription for their overall cloudy space. In forms of Palantir, I mean, the stock still has done amazing in the past year or so. So, I mean, unfortunately, sometimes we get into the stock when things get really exciting, and we see it with all the big players, right? Palantir, with Nvidia, they start to get popular when the stock has gone up a nice amount. Unfortunately, that's probably sometimes one of the risk to reward ratio drops down a nice amount when it becomes popular. So if you're a long-term investor in Palantir, I'm pretty sure you're not feeling much pain. If you're someone who just got in recently, I think it's going to be a very volatile ride. That doesn't mean it's bad. It's just, it's going to be volatile from here on out. I think where stock prices can fluctuate on either direction. But very similar to you, for things like Palantir and some software AI space, I'd rather be a patient investor and buy maybe what I believe are opportunities in the future. Because at the end of the day, Neil, the market always gives us opportunities. We just have to, at the moment, realize that there are opportunities, because sometimes we don't realize that.
I agree. We're getting a lot of questions on Vertiv yet again. So I did do a little video about Vertiv, Snowflake, and Adobe. So I went over Vertiv a little bit, and it does seem like management were quite cautious with their guidance, which is why we have seen the stock get hit, especially at the start of this year. But I mean, of course, if we zoom out, the stock has performed quite well. But it does seem like this is a company that is well managed. The CEO said that, look, and even touched on the DeepSeek thing. He just said that, well, it's just going to push more and more innovation, more people to start building thanks to AI. We are guiding like not too aggressive, which probably means that in the next couple of quarters, I wouldn't be surprised if we see some beats and raises. The company is still doing very well. It's on the way up and to the right. Of course, there's always a correct price to pay for these things, but it's like we said in the past episode, if you want to have exposure to that AI wave, but not directly through the semiconductors or whatnot, Vertiv, Vistra, and the others are options, right?
Yeah, I'm actually surprised that this one hasn't gone up since the whole DeepSeek drama. Right? I mean, I feel like almost every other AI stock in general has kind of seen that growth back after DeepSeek. And DeepSeek doesn't really push out the growth of data centers. I think we continue to see that we're actually going to need more data centers, more computational power. When we've talked about Vertiv in the past, one thing is I believe maybe the market was expecting a lot of growth from this, but at the end of the day, it's a construction company, right? I mean, building a data center takes time. So revenue expectations, guidance can be very can fluctuate a lot, because you might have a delay in something with the power, with the cooling infrastructure, something in the data center market that pushes off revenue. You can't build all these massive data centers right away. And these data centers take multiple years to build. I mean, Meta announced that they started construction in a data center at the end of 2024, and it's not expected to be fully finished into 2030. So I think Vertiv is now kind of the understanding that, hey, look, while there is growth, you're not going to see that crazy growth all at once. But I guess it creates that, it shows a sustainability and visibility for at least constant growth throughout the years. And maybe investors were just expecting too much. But this is interesting because today, Neil, I also learned about another company, ticker EME, EMCOR, and it's also in the EMCOR right there. It's also in the data center market, Neil. They help kind of build data center infrastructure. And very similar, I was shocked that the market after DeepSeek drama hasn't really kind of given them back up. So maybe this is a time to really do more research on them and see if you want to add them to your portfolio. But Neil, still, if you're already heavily in the AI market, I think this just increases your exposure, right? It's not like you're really diversifying out of the AI space. You're still in the AI market. So it's going to move very similar to AI stocks.
Yeah, I agree. These are team-based, right? Team-based picks. And I mean, as investors, we talked about that in the earlier episodes. I think as investors, we're always maybe looking towards some other types of names that might get us maybe in a less risky bucket or whatnot. But if it's the same team, then it does seem like the market just looks at teams and like, you know what, you're in that bucket. Everyone in that bucket does come down, or everybody in that bucket does go up. So like you said, this is just another way to get exposure to AI. And we don't always need to look elsewhere, right? The grass is not always greener with another stock that's not in your personal portfolio. Because as we've seen, I mean, this stock should technically be up, but it's down.
And Neil, Greg brought up a good point. I'm pretty sure he means XAI. XAI did a new data center in days, amazingly fast, so it might not take so long. I think XAI's data center also has a few caveats that investors should know. They found I think it was a manufacturing building already that already had the power in place. The building was already built, right? So a lot of the infrastructure was there. Obviously, XAI did other things. They kind of talked about how they added more power via Tesla's battery packs and all that. But a lot of the infrastructure was already built there. So with some of the other data centers, it's kind of a full construction from ground zero. So I think that's the difference. But not to say Tesla, or XAI. XAI did something amazing. But they were smart of finding abandoned. I don't know if it was abandoned, but an abandoned building that already had a lot of the infrastructure in place.
But I do also think that Tesla themselves did something quite rapidly with their Cortex super cluster, or whatever you want to call it, in Austin, and I think that has been built up from scratch or close to scratch. So
Oh wow,
again,
okay, I wasn't
yeah,
familiar with that one, Neil.
no, but both have been built, especially XAI. I mean, they managed to put everything online in like a record speed. So it's true that things can go faster, but not everyone can move that quickly. That's for sure. I've seen a lot of questions about Novo Nordisk. I don't know if you're following that name in the GLP-1 team bucket. It's a company that, as you can see, has gone down 31% year on year. It's an amazing company. You have Eli Lilly, you have Novo Nordisk, you have, of course, this whole Ozempic GLP-1 team that has definitely helped these businesses. But yeah, apparently the market does not like them currently. I still view it as a very, very good and stable business. There are definitely maybe some out of the company's control type of headwinds at the moment. So whoever likes these types of names, I guess this is another good time to start looking into these ones, just like with plenty of others, right?
Yeah, this is one I don't follow, Neil. So they it seems based on kind of the companies that they follow. They're in the healthcare space.
Yes. So they are the Ozempics. They are the Ozempic one out there. There is Ozempic, there's Wegovy, but of course, in recent years, the majority of the huge revenue spike came from GLP-1 solutions for Novo Nordisk and the main competitor Eli Lilly. Of course, it says here already in the headline, with RFK being the head of the HHS. Of course, there are some potential headwinds. We don't know what might happen. Some changes in the healthcare industry in the United States might or might not hurt these types of companies. We've seen that with plenty of other healthcare stocks.
Definitely, Neil. We're getting a lot of questions here about ARM. The most recent one was from Aaron. What about ARM? Um, Neil, I think we've talked about ARM before. Am I safe to say we both think this one, while it has growth opportunities, the stock price might not favor our risk to reward ratio, kind of kindly to say. And I mean, I think right now ARM Holdings has that threat of SoftBank unloading shares as they need to build more cash to invest in a lot of this AI investment. So while there is huge growth opportunities, I'm not a fan of the valuation. Obviously, we're seeing ARM architecture grow into data center space. We're seeing it grow in the in the PC consumer space. And if we get into the robotics market, into the automotive market, I'm pretty sure ARM is also going to be a huge benefactor in those industries. So there's that growth opportunity, but valuations is not something I like right now. And the risk of SoftBank unloading shares is just another risk that maybe I'm not too excited to be an owner if I was, but definitely growth opportunities out there. Your thoughts, Neil?
Yeah, no, I agree. I think we repeat the same script in each and every live stream, and that's fine. Not everyone joins the episodes, but yeah, it's an amazing company that is very expensive. Lots of future expectations baked in. I would say it doesn't help that SoftBank, I think still owns 90% of these shares, holds 90% of these shares. So It's always a danger, but yeah, I'm not keen on buying this one. I rather focus on the other names that I already own.
Neil, here, what if you bought ARM early, like 46 shares? Should one take profits? I mean, obviously, Neil, we don't provide personal advice here, but I think in my opinion, I would look how much of a thesis do I have in that company and how much growth opportunity I see. I mean, and also portfolio allocation is very important, right? I mean, if I had a company that went up 3x or 4x, but it was still only like 5% of my overall portfolio, I don't know how much I would really want to sell off, maybe sell a bit. But then if it was like 30, 40% of my portfolio, it would definitely hurt if the stock drops. So maybe I would want to allocate a little bit better. Um, so are my thoughts. How do you see stocks when you see massive gains? As we always can hear that thing, right? Let your winners keep on winning.
Yeah, no, I agree. It definitely depends how big that is in your portfolio, because if it's super big and it has run up a lot and valuation is quite stretched, then you're holding more risk in your portfolio. Plus, keep saying the same thing. Nobody got poor by taking profits, right?
Yeah, and no matter how much a stock goes up, I think I have one rule that I'm not going to break is I will never sell the entire share, um, just because the market can keep going up. So that's if I was scared of valuation, I might trim, but I would never completely sell out.
Yeah, so David's saying that it's 9% of the portfolio, which again could be big, right? If the others are not that much bigger.
Yeah, we had a few questions, Neil, of RX, and I think June kind of broke it down really good that RX is a very speculative play, in my opinion. I mean, RX has gotten a lot of excitement because NVIDIA does own an investment and they were not one of the companies that they trimmed off. So it got the market even more excited. This is a company that has a lot of data. They're kind of creating their own AI model that you can actually find in NVIDIA's AI platform, AI enterprise platform under BioNemo. Very similar to June. I own a very small position. This is a speculative play, and it's one of those that if AI can really revolutionize the drug discovery market, it could potentially be a big winner. But it's not. It's one that I would expect volatility. I mean, I think less than 2 months ago, the stock was probably at $7, and now it's up at $10. Maybe even a lot sooner than that. And I would expect this same type of volatility going forward, where one week we can see it at 10, another week we can see it at $7, and I wouldn't be shocked.
Yeah, that's the importance of portfolio allocation, right? Having these small bets being quite small for the portfolio. If it works out, great. If it doesn't, it won't really destroy the portfolio's performance.
Neil, this is a very personal question here. What is the maximum holding size percentage for a single stock that you would have before you rebalance?
Well, I know there is David here in the chat that said that Palantir is 80% of his portfolio, but I think he did quite well with that. So congrats. But I mean, at one point, Tesla was just above 50% of my portfolio. But I did reduce it by quite a lot. Now it's more in the low 20s%. But to be honest, I don't know. It depends because there are people that like a portfolio with just 5 stocks, with 10 stocks, with 15 stocks. Really depends how many positions you have in your portfolio. Me personally, I don't mind having like a Tesla, an Amazon, a Meta being 20% of my portfolio. I don't mind it at all because these are one of the best out there. I don't mind them being overweight, let's call them, my portfolio. Over time, that percent can come down as the low-hanging fruit, let's say, the smaller bets start working out and being a larger part of that portfolio. And I'm fine with that. I mean, Uber started small-ish single digits. Now it's already double digits of the portfolio. Alibaba, believe it or not, is up 50% for me already. So that one, of course, if it becomes, I don't know, somehow 20% of the portfolio, I would probably trim it. just because of the China risk and the nature of holding that stock. But yeah, that's
Yeah.
basically the answer.
And I think this is the perfect example of kind of like, at the end of the day, is personal investment. Um, I don't mind holding NVIDIA is my biggest allocation, and it's about, I would say, somewhere between 25 to 30, maybe 33% of my overall portfolio. And only a selected few, Neil, I think I can keep that high. And those are companies that I have to be able to follow, or at least understand um, truly how this company moves, and like really understand, where I can talk about this stock for 3, 4 hours and not get bored about it, right? Because I just need to have that true bullish thesis behind it, to be able to hold that type of portfolio. Um, there's not many stocks I could say would be that allocation. Um, but around 10, 15% is still ones that I probably, most of my stocks that I now buying into fall within that range nowadays, of like somewhere between 7 to 12, 15% of my overall portfolio. But again, every investor is different. Some investors don't mind holding 4 stocks. Some investors don't mind holding 50 stocks. I don't think there's a wrong way. You just need to find the way that works for you.
Yeah, I don't, correct me if I'm wrong, but I have also, like, when you start off with a small budget, I would much rather have as few stocks as possible, if that makes any sense. Like, because if you're, I don't know, you have a budget of $10,000, let's say, or even 1,000, it would make less sense to me to open up 10 positions, because then it's like 1,000, 1,000, 1,000, two super small positions. Once you grow that portfolio in the future, a successful 6-digit portfolio, maybe even more, then having more positions wouldn't be that bad, because it would be positions worth $10,000, $20,000, $30,000 or so, and that could have a greater impact. So to me, I don't know, in my head, I was like, small budget, small portfolio, bigger budget, you could have the luxury of having more positions, if that makes sense.
Neil, I actually kind of disagree a little bit with that point. I think it's all about
Oh,
perspective, because let's say as a 20-year-old, or before even working, $1,000 might feel like what feels to me like $400,000 nowadays, right? Like for me at 20 years old, $1,000 was probably a lot of money. And while obviously I would ever always be happy finding $1,000 between the couch or somewhere, I'm not gonna say I'm rich, but my overall perspective of, if I do lose $1,000, it's not necessarily the worst thing for me. But at 20 years old, $1,000, I would have felt like it was game over for me. So it's, I think, all about perspective, um, um, of how you see that money during that time frame.
I don't know, for sure. I agree on that point of view, for sure. I mean, I bought an ETF when I started, because I didn't want to lose that money, and it wasn't even $1,000. I think it was $725 or something like that, to be specific. So no, I agree, but I know, I was just thinking based on just portfolio allocation in general, seeing the returns and the risks. If that made sense, maybe it made more sense in my head.
Or maybe I'm just super bad at listening, Neil. I'm horrible at that.
Ah,
Neil, question for you here. Reddit, stock that you follow, thoughts? I'm a huge Redditor. My wife is a huge Redditor. But I don't know, valuations have jumped up like crazy, right?
I mean, I know we can get some great infos and leak stuff on Reddit, but I hate that platform. I just don't like it. But yeah, apparently they've done well. Apparently the stock has done well. More recently, maybe not after the earnings report. But yeah, I'm not going to say much because I'll go into a negative rant here. But yeah, this is Reddit on the screen.
Yeah, to be honest, I'm not too familiar with their business strategy. Do you know, Neil, if it's an advertisement play, in forms of their main business style, which I would think it is?
Mm-hmm. Yeah, it
And I
is.
wonder if they
The-
sell data too, because I know they had like that partnership with OpenAI, I believe. I wonder if that's another one.
yeah.
Again, I don't follow it, but definitely, right, they have huge amount of data. Obviously, an advertisement platform, but if I'm looking at that space, I don't know why I wouldn't just choose Meta, um, or Google. They plan to introduce paywalls this year. I don't know if that's the best approach. That's pretty weird. Why would I want? I don't know.
That's not the best approach. Banning a lot of people from forums is not the best approach either, to make sure that you have more users on the platform. But oh well. I want to switch to something more positive, which is my loved Intel. Although it has been now 2 red days, which is not that great. After we had like a day of it being up 16%. To be honest, I know the stock is down. I was in the green with Intel finally for like a couple of hours. But seeing this might mean that the market thinks, maybe Intel is not going to be bought by TSM or Broadcom or whatnot, which to me personally, I like it.
Yeah, I mean, Neil, while I don't own Intel, and while I do kind of give it a lot of jokes here and there, I agree with Jim Keller, who mentions that a great Intel is worth $1 trillion. I honestly believe that a successful Intel is these are a steal at these values. If Intel turns around, if they become the huge manufacturing player that they want to be, their design team is not that horrible. I mean, that can continue to win. But if the manufacturing push turns this around, this in the next 10 years could be a $1 trillion company. I'm not going to go against that, but then are you willing to take that risk? And it seems you are, right, Neil? I mean, you do believe you're buying it at very low, below book values. It's just now with Pat leaving, wasn't a huge fan of that. And now with the current administration maybe trying to push it to do some things that it doesn't want to do, I'm not a huge fan of that as well.
Yeah, no, I agree. To be honest, if I had to choose like a dream CEO, it would be Jim Keller for sure. And maybe he can even bring his company inside of Intel. They can sell out the Altera or whatever it's called, and sell even more chunks of Mobileye and get him in with his company. Because I do think that he would be the perfect CEO to turn Intel completely around. And to me, as a shareholder, 2025 is a make or break year, because I think 2025 is a year where we're basically going to know either they're going to get spin-off, bought, whatever, or they'll continue Intel independent company. Yes, okay, different separate P&L for the foundry, but at least we'll know what's going to happen. So hopefully they keep doing what they should be doing, because I've been seeing some reports and engineers on the foundry side of things that are saying that they hope they don't sell it, because they believe they have the next best thing over TSM.
Yeah, I mean, same. I've seen those discussions where Intel 18A is looking to be very attractive, and um, I'm hopeful for the stock. I really am. While I do kind of badmouth it from here and there, I think Intel, if you're willing to wait for that turnaround opportunity, that turnaround opportunity is going to take longer than expected. I think it's not. I think there's a shot. There's a shot, right? So, and I would definitely enjoy Intel and having more competition in the manufacturing space, because Neil, if there's more more competition in the manufacturing space, NVIDIA will be able to make their AI chips a lot cheaper, because they'll be able to kind of, hey, you don't want to give me better pricing, maybe I can go over to Intel, get better pricing. So if you are investors of other companies that are fabless, competition can definitely be helpful in margins.
Yeah, I agree. I think we've talked about that before. I think all of these big tech players are secretly hoping that Intel's tech is getting better and better, so they are not all like bending the knee to the TSM overlords on pricing each and every time.
Yeah, we also got a few questions. It seems like Nebius has kind of seen a nice growth. I think they just reported earnings, Neil. I feel like you might have tweeted some X. I don't know what's the proper term nowadays. It seems like you might have X some. Um, um, and any thoughts on earnings or what they mentioned?
I did X, I did post, I did tweet, I did do whatever you want. I did even make a video about the earnings report and call already on the channel. Everybody can watch that after this live stream. But as you can see, we're seeing a nice reversal throughout the day. Stock did come down 10, 12% or so, and now we're up 2.43%. Of course, the stock is already up 66% year to date. Good report. still on track, growing extremely quickly. They did comment a little bit on B200, GB200, and even GB300. They expect to make that available later this year. So that's a good commentary. Good commentary. It's a company I can understand. People are saying, oh, they're still Russian, blah, blah, blah. I don't think so. I think they've made all the necessary moves to move away from Yandex and Russia HQ in Amsterdam. So this could be, in my eyes, I don't hold any shares, by the way, but this could be like if you're looking for maybe a European AI play, this one could be it, even though they're also growing rapidly in the United States, Kansas, Dallas, and I think they're going to announce a new location soon.
Yeah, I think right now, June mentioned one, Applied, the data center NVIDIA put money in, has been moving up recently. I think you kind of can, Applied focuses more here in the United States, and I do believe they're kind of expanding maybe in certain parts of Europe. But I think from what I know, and somewhat in my gut feeling, if I had to play between Applied and Nebius, I think I might choose Applied Materials. So, but I got to listen to that earnings call, because I always forget that it's great to get insight from these companies about like the GB300, right? Not many people are talking about that. But if they mention something, now I got to look at that earnings call. So thanks for giving me more homework, Neil.
You're very welcome. It's a punishment for last week.
There were any questions you have, Neil? This was pretty interesting. So some comments about Microsoft's quantum chip. So yesterday, Neil, Microsoft unveiled their Majorana 1, I believe. The quantum market is definitely getting a lot of excitement recently. I've read the press release, and I watched the video that they mentioned. And one thing that really stuck to me, Neil, is at the end of the day, it really seems like right now what's gonna at least happen within the next few years is this hybrid quantum approach, which is the ability of using kind of your traditional classical computing with a mixture of quantum computing in the near future. What I'm more curious about is to see how GTC, NVIDIA's GTC event, they're going to have a quantum day, and it's actually the panel is going to be Jensen and a lot of quantum CEOs, which I think is going to be pretty interesting, because I remember when Jensen kind of pushed back on the quantum market about 15 to 30 years, he mentioned there were a few quantum CEOs that are actually going to be in the panel that kind of like said he doesn't know what he's talking about. So I'm just curious if there's going to be any drama during that panel, and if they're going to stick to their gun of what Jensen said, and if they're going to try to dispute that a little bit. But I mean, I think while I am bearish in quantum stocks in the short term, I want to say I'm bullish in the technology. I mean, you can be both, right? I mean, you can kind of understand that the technology is evolving, but valuations in stocks might not make sense. And I'm going to stick with that right now. I think we're seeing everybody enter the quantum market in forms of research and development. And a lot of companies have been doing this in the past. Intel has had their chips, their quantum chips for a while now. And Google has been doing it for a while now. Microsoft, they mentioned that they've been doing research for over 17 years on it, but this was kind of the first chip they released. I still believe a lot of these quantum stocks are going to be maybe not the best performers within the next 2 to 3 years, though.
No, I agree. I agree. People need to understand that Microsoft, IBM, Intel, Google, they're all working on quantum as well, right? So if you want to have that future exposure, these are quite solid names, because you're getting all the other businesses as well. If you want more volatility and maybe, I don't know, trading vehicles, then yes, the D-Wave Quantum Computing Inc., the previous beverage company that was Rigetti Computing, those are the other names that already up quite a lot, right, in the last couple of months. More risk, could work out for sure, but could also definitely not work out.
Yeah. Yeah. At the end of the day, Neil, right? It's all about that risk to reward ratio. That's how I see investments, right? When investing in a company, I look at the risk to reward ratio that I believe, hey, would I just rather go to somewhere else and gamble my money, or do I have an edge here? And with certain valuations, I feel like that edge starts to decrease. It doesn't mean that the stock price can go up. The stock price can continue to go up, but I'm just not willing to take that risk with my portfolio.
Yeah, agreed. I've seen some people talk about Nu and Meli, so both of them are reporting later today, I believe, after the hours, after the market closes. So that's going to be quite interesting. Me personally, I own Mercado Libre. Nu, I used to own, performed very well, but I just wanted to concentrate more in Mercado Libre. But I mean, two amazing companies, which I'll probably cover later today.
And just funny, June, Jose, are you joining up with us? She, weird of you to know, but June, she hates me, because I think stocks are too overvalued right now in that market, and I still stand by that.
I mean, I agree. I agree.
Yeah. What about TSM? I mean, Aaron, this is Neil. Any thoughts on TSM recently?
Let's see what has happened. Is it down another 1%? Yeah, close to.
Oh, yeah. I mean, I think TSM is one of those stocks that, in the long term, will continue to benefit dramatically. I mean, if we are getting into this world where we're going to have more robots in the industrial space, in the consumer world, if you have autonomous vehicles or just smarter vehicles, other types of mobilities like drones, more AI components, more smart components, I think you're going to see a huge increase in volume, and consumers what drives the chip market, no matter how you see it. So TSM, I think in the long term has a lot of bullish scenarios. In the short term, Neil, I don't know why. I feel like I would rather buy a semiconductor ETF than TSM, as I don't know how much more growth there is in the short term. And I think maybe I could just get a little less exposure, a little less risk by exposing into the overall market, as an ETF. So I'm not a fan of TSM in short term valuations. In the long term, a lot of potential.
I mean, a bit like with Broadcom, right? We discussed that the stock has run up quite a lot. Earnings are coming up as well. It's one where a lot of future growth is baked in, unless, of course, they announce, oh, we're adding another super, I don't know, 2, 3 big tech companies to our list of customers. Of course, that could push the stock even higher. But I agree. I mean, it's an amazing company. If you own TSM, this is really one that you just don't touch, no matter what, in my opinion.
Actually, I wanted to touch this one, Neil, but I wanted to talk a little bit more about TSM. Cadence just reported earnings, Neil, ticker CTNS. They reported earnings, I believe, 2 days ago. And Cadence, for those that are not familiar, is the software company that helps kind of design the chips. So if you want to create your own AI chip or whatever type of chip, you're going to be using software applications like Cadence or Synopsys. One thing during the earnings call, Neil, that they mentioned is before this huge data center and AI boom, in forms of data center revenue and AI chips, 2 to 3 years before that, they started to see a lot of research and development going into the designing of AI chips, right? And about 2, 3 years after they saw that huge influx of research and development, we started to see that huge growth in AI data center revenue. They mentioned, Neil, that right now what they're seeing is a huge influx in research and development in the automotive market, in the robotics market, in the drones market, what they call kind of that physical AI. We've kind of heard about physical AI a lot from Jensen, but I think it's a great know that, hey, look, this is where research and development is going. So within the next 2 to 3 years, these could be markets that could be getting ready to explode. So I did like that small keynote that they showcased during the earnings call. And the reason I mentioned that is because those are markets that could probably be good for the consumer space, which obviously can be good for the volume wise of chips, which could be good for TSM.
Well, voila. I don't follow it, but great explanation. Do you want to add something for Sonny here on Unity?
Oh, yeah. So, I mean, Neil, we were talking about it beforehand. Unity was down before, when they reported earnings, before the earnings call. I think it was down about 10%. After the call, the stock is actually up 27%. During the before the call, they gave you the numbers and guidance, and unfortunately, guidance missed revenue expectations of what analysts were expecting for guidance. during the earnings call, Neil, they kind of explained why they kind of softball their guidance. They mentioned that they have a huge advertisement platform, but they're shifting from their current platform into one more AI based, which is really good. Obviously, we've seen kind of how AI has improved the advertisement market. They call it the Unity Vector, is what this new ad platform is going. And this new platform is not going to start really, they're not going to really start transferring over until the end of this quarter. And it's going to continue throughout quarter two as well. So I guess it gave some confidence that while they are maybe guiding a lower guidance, is because they're improving their advertisement segment. And now that it's going to be more AI based platform, it should increase efficiencies in the rest of the year. So I guess I wonder if that calmed down some of the investors and why the investors are super excited, as obviously the advertisement market could be a huge free cash flow machine for them. And I think that's what the market really cares about right now.
Yeah, plus I mean expectations were quite low, right? I mean, if you look at the stock, you zoom out a little bit, this thing has was gone and forgotten. So now with the new CEO, maybe a better roadmap, more positivity on really where this business is going, growth wise, profitability wise. I think the market really appreciated that. So I guess being up 26% after underperforming for so long, finally some relief.
Yeah. I think Unity also below a $10 billion market cap, Neil, is a steal. Um, I think anyone would gladly pay $10 billion for Unity if they could. I think obviously regulations would push otherwise, but for $10 billion, this is a steal, but it's also going to be one that's going to be very volatile. Neil, I think I wouldn't be surprised if next week this drops back down to $22 or below. I really wouldn't, as the volatility in this market is insane. Um, and while we might have gotten good news today, I think the market might forget about it in 2 weeks from now. And it does seem like June mentioned Unity got a deal with Toyota for their computer units. I did see that. I don't know if it's the same deal. Maybe it might be different, but Toyota mentioned that they're going to be designing a lot of their human interface for their cars using Unity. So obviously, kind of seeing more wins outside of the gaming market can be seen as maybe more of a bullish scenario for Unity.
Yeah, no. I mean, even previously they talked a lot about the digital twin and all of that. So it makes sense. It makes sense for them to go that way. I don't want to stay in the car, let's say, topic. This was from a while ago from Sagig. What do you think of Uber versus Lyft? Where you feel is better the opportunity long term, considering today's price? He owns Lyft, not Uber. We both own Uber, not Lyft. But I'll let you share your thoughts first, and then I'll jump in.
You know what, Neil? I own Uber. I've never really looked at the competition much, so I don't really know too much how Lyft is and where it goes in valuation. To me, Uber just in this current space of AI, having a huge amount of data sets, having a huge platform becomes a major asset, in my opinion. And not for your, we discussed this over, Neil, right? It's not about robo taxis. With AI, I think AI, when you have a lot of important data sets, you can really improve efficiencies dramatically. I mean, we've seen it in the advertisement platform. I think we can see it very similar in the ride sharing, in the ride hailing, in the ride delivery platform as well. So I think that's why I enjoy Uber, the huge data set, and the huge platform. I don't have any bearish takes to say about Lyft, but again, I wouldn't say I'm very ill-informed in Lyft's competition.
All right, so I could maybe add a little bit more color on the Lyft side. I did look at it, did make a video not so long ago, actually two, one for the earnings and then the other one a couple of weeks back. It's, to be honest, it's a company that is also a bit like Unity. It's been left for dead, but they've turned a profit. They are growing. The business is doing okay. Of course, Uber being Uber and being the leader by quite a wide margin, made sense for us to go with Uber and not Lyft. But if you're looking for value, and again, not personal advice, but if you're looking for value, I did a reverse DCF, and Lyft is basically priced for 0% growth, actually negative growth at these prices. Plus, they've got an autonomous play as well as some partnership with Mobileye and another company as well. So it's very very interesting. But of course, I'm quite comfortable with with my Uber position. But they are doing quite well partnerships wise. Uber is probably one of the best out there, and in my opinion, very well positioned for the autonomous future. Although many Tesla Uber bulls might disagree, which I'm a Tesla bull, but I can admit that both can coexist.
I think that's very hard. If you're a new investor, I think that's one important thing you should always learn is that nowhere in this market, or very rare in this market, is a one winner take all. I mean, we have unique cases like ASML in the lithography machine. It's literally a pretty much a one market take all. But for most of the space, I think you have a better percentage of being right when you believe it's going to be more than one winner. Um, let's see, what else do we have here? There was one I wanted to. Oh, I want to hear. I see your thoughts on this, Neil. Are you guys worried that investors are starting to expect huge growth in a short amount of time? Seems like investors are a little upset when stocks aren't going up as fast as others, Hood or Palantir. Um, thoughts there, Neil?
I agree. I agree with Matthew. Um, I mean, it's quite funny, right? We had the pandemic pump, and everything went up, everything went 10x, whatever, didn't make any sense, and nobody was asking questions. Then we had that horrible bear market. Everybody started asking questions. Why is this down? Why is this down? And then we entered a 2-year bull market, which in my opinion is still going on right now. Same thing. Not a lot of people asking questions on the way up. But then when a stock goes up 300% and then it goes down 10% in a day or two, then you see people ask questions. I'm like, come on, are we back at that stage of the bull mania? I'm not worried. I have cash. I'm not worried. I did pivot towards stocks that weren't flying so high towards the end of last year. Uber being one of those, Alibaba being the other, and then more recently, of course, AMD and Micron. But yeah, it does seem like because of social media, maybe there might be a lot more of short-term price sentiment reaction or whatnot.
Yeah, definitely. Neil, I mean, I would say the only thing is, it gives us opportunities sometimes where, if you want to enter, obviously there's those high stocks that go down, but sometimes you get those random where it's like a good stock that actually took a huge hit, or somewhat of a buying opportunity. I mean, and those are, like you mentioned, have cash available to you, is a great asset in my opinion. Um, and yeah, be ready. One thing that I love to do is when market starts to go down, just like start increasing my overall weekly investments. But overall, not too worried, I would just say, because maybe the stocks outside of Nvidia that I really, really enjoy right now are pretty hated, like AMD. Right now, I think Uber the past few weeks has been really liked, but before that has been pretty hated. But I think the ability of having cash outside can somehow help you sleep better.
No, I agree. 100%. That's when you have cash, you worry way less because you're like, oh, my stock is down, still doing quite well. Thank God I have cash. I can add more. When you lack cash, then that's true. Then maybe in your head you start to panic. You're like, oh, now my cost average could have been a little bit better. I wish I had cash. Maybe I should sell another position to raise some cash, etc., etc. So it's always good to have cash, even if that just sits on your account and doesn't really grow. At least when you have those sudden dips or sudden crashes, you can use that cash, increase the companies that you like that are still doing well, but just the market overall isn't doing fine. And like you said, you'll sleep much better. And yeah, with sentiment, it's quite funny, right? I'll take the example of this name right here. I don't know if you noticed this, but over the weekend, this thing just went all over my feed on X,
Same.
maybe yeah, yours as well. It's I don't know how, like literally on Sunday, every other post was about Grab. Every other post was about Grab. Turns out this is the next 10x, whatever. I talked about it in November. I talked about it not so long ago as well. And there was earnings, as you can see. Apparently, the earnings was not that great. It was fine. It was fine. It's down 9.64%, which means it's back to prices not seen since, well, I don't know, 2 weeks ago or something like that, a big deal. But it's quite interesting to follow the sentiment on social media around certain names, GrabWin being the most recent one. We, of course, talked about AMD. AMD was the next NVIDIA. Now it's the next Intel. It's very, very funny how these things work.
Yeah. Neil, I think we're running now to top of our hour. I don't know if there's any final topic you want to share. If anything, just a quick plug to my overall newsletter, if you don't mind, whatthechiphappens.com. I've actually been very consistent recently, Neil, with posting a bit. I posted one today, and we talked about kind of the Google news that we saw about Microsoft's quantum chip. And Lam Research also just kind of had an investor day this morning, where I kind of talk about that one too. So if you want semiconductor news, definitely check out whatthechiphappens.com. It's a free newsletter and great insight in my opinion. But obviously I'm biased, Neil, because it's mine.
Yeah, but it is true. It is not bad. It is not bad. The links are in the descriptions. It's free, so I mean, you can always try. That's the beauty of it being free, right? Like subscribing to our channels, it's free. You can always unsubscribe later on if you want.
just don't unsubscribe.
Don't.
Neil, I mean, it's gonna be a long time before we see each other. Tuesday seems like forever from now, right now, Neil. Anything that you're excited to see before our next Tuesday meeting?
I mean, Tuesday would mean just before NVIDIA's earnings, so I guess that will be an NVIDIA-focused episode. Hopefully, we can get like a weekend where nothing happens, like a weekend where we can just let me have my weekend. I mean, tonight is already a packed earnings night with Block, Mercado Libre, New Holdings. I believe Celsius also, I think yesterday or something like that, came out and said, oh, actually, we're going to report Thursday after hours, and we're going to have a conference on Friday, fueling some rumors of maybe PepsiCo might acquire the company. I don't know, but we'll see. Hopefully, the weekend is quiet.
Definitely, Neil. And unfortunately, Jimbo, I don't have any thoughts on ANET right now. I saw a lot of comments and questions about this, Neil. So I'm gonna take the time to kind of do some research on this, and hopefully Tuesday, if there's still any thoughts about it, I'll definitely do share more thoughts. But it definitely seems like a lot of questions came out, and maybe I might do a video or two, not a two, maybe a video this weekend. Depending if it's a quiet weekend. So, Jimbo, appreciate those, and sorry I couldn't answer much on ANET, Arista Network, today.
Yeah. Did you cover Vertiv in your newsletter yet, or should we punish
So
that?
the day, we had the Tuesday thing. I mentioned Wednesday, so Wednesday it came out.
Okay, so Jimbo, you might maybe get your answer in a video or in the newsletter.
Yeah, maybe actually that's true. I might do both maybe I might do a double whammy with ANET and Vertiv. But yeah, I'm sorry if we missed any questions, right, Neil? I mean, we try our best, and we really love the engagement. Neil, it makes these episodes go super fast. And appreciate all the support. Neil, I'll let you have any closing thoughts, as sometimes I might just go too much.
No, I mean, we appreciate all of you joining here. If this continues, of course, we might expand to more days in the future. With earnings now, it's already quite packed. So maybe after the earnings season, might be a little bit better to expand. We'll have more time, and we can address way more things through each and every episode. So thank you all for joining, and have a great weekend already, a pre-weekend wish, and we'll see you all on Tuesday. Bye-bye.